seem on track for 5,300?
Yeah, you could see maybe a few days of correction, maybe a 50, 100 point, 200 point on the Nifty. But yes, the market is back on its bullish zone, and you would see it trying to test its earlier highs, maybe as early as end of this month or maybe early next month. Maybe early next month has better chances because liquidity may get tight towards end of March. But thereafter, I think with easing of liquidity, you may see the market scaling to earlier highs and maybe even testing it. But as you said, Mitali, that action has shifted more to small mid-cap stocks. And, you could see gradual small movements in the Nifty and the large cap stocks. But as the days go by and the market continues to trade above the 5,000 level, you will see renewed interest in the small mid-cap stocks, especially from investors who have the feeling of being left out. They try and kind of increase their exposure by buying into the small mid-cap stocks, and there even a limited amount of volume or liquidity can drive the stock prices up. So that's the segment which will witness maximum action and maximum chances and opportunities for trading as well as investment.
Dipan, any fears though that the market may begin to stall again as it has in the past around these levels, that the strength of the momentum pulled us this far post the budget and may not do it for more?
See, we have said it time and again, and I think every guest on your channel keeps repeating this global factors, geopolitical or geofinancial issues. Greece, Spain, we keep hearing so many of such threats. You have to keep that in mind, that such threats can certainly stall. End of the day, our markets are reliant on FII flows. They've bought in 3,500 crores plus since the budget, and we've seen what action or what impact that has had. And we've also seen that when they take out $1 billion also within a week or 8-10 days, then what impact it does have. So we remain glued on to what is happening, and will react to global cues. But assuming that the global markets are sideways, mildly supportive, we would see the market scaling to even higher levels. What I have seen is a big difference is that there's a good amount of feel-good factor, and investors we speak to, and I'm sure other brokerages are speaking to, are getting more and more optimistic about stocks, and they're getting more comfortable about owning and increasing their exposure, and that is very positive. So maybe the trigger has come from the FIIs, but you will see that scaling up to new highs and that breaching the earlier tops will be done on the back of heavy retail buying. Maybe even some of the institutions could come into the market to buy. But let's keep in mind that about 200 points, 300 points Nifty higher from here, you would again have the threat of fresh IPOs, FPOs, and that can kind of make the picture a little bit murky. And then you could have perhaps some sideways movement as the liquidity adjusts itself to the supply which is coming in from the primary markets. But I don't think that primary markets by themselves can cause a major correction in stock prices. In fact, a lot of investors will take the opportunities in the primary market to try and increase their exposure to equities. And we are of the firm view that there's a considerable amount of cash still waiting on the sidelines to be invested, and that will always help the market. And you could see it, if not would not see any serious corrections purely on account of domestic factor at least.
Of those primary market offerings, any thoughts on NMDC and how it should best be priced?
It's a bit of a controversial idea, but I think they should suspend trading in stocks where the FPO is being announced, especially in stock like NMDC, where the floating stock is less than 5%. And clearly you can see it on the screen as well, hectic speculative activity, very low delivery volumes taking place, and clearly it's a perfect situation for kind of a price rigging. So the best way to do it is to suspend trading for some period of time and then price it, and then the new shares could get listed, and that will be the way going forward. Also, I believe there was a proposal to put it on trade for trade. That may also help. But by and large, I think if you ask me from pricing point of view, compared to its peer group, it is expensive by 25-30% or so. And given the kind of track record of FPOs, I think that the government should consider that kind of a discount on the pricing side. At the same time, I think at those levels you could see a very decent retail participation as well, because retail investors could get instant, the pop which they get on allotment of shares. That would kind of attract a lot of investors. And I think it's very important for the government to, get this entire disinvestment thing going in a excitable manner. As of now, they're just putting it down the throat of the markets. Other than, creating a buzz or creating excitement or creating that kind of, feel-good factor about going in for disinvestment. On the contrary, it's becoming more of a seller's market, whereas ideally it should be of a buyer's market. End of the day, these companies are extremely valuable, and do keep in mind that these are one-time kind of FPOs, and you will not see companies like NTPC or REC, for that matter NMDC also, coming to the market frequently, because they have huge cash surpluses which are far in excess of their requirements for capital expenditure. So I think the marketing is a bit of an issue over here, maybe pricing with the methodology, but some brainstorming needs to be done to create a nice excitement around this entire process.
Some of these natural resource stocks like Gujarat NRE Coke, for example, even Sesa Goa.
Yeah, Matali, I think they're quite interesting at this point of time, and maybe the ones who actually have got mining, licenses like Sesa Goa, maybe Gujarat NRE Coke, maybe even a KN Energy, NMDC, of course, notwithstanding the FPO, are quite interesting, and we are seeing increases coming through for these companies. Prices of minerals are going up, and I think that China buying continues, despite there being a few bottlenecks. So by and large, I think one should remain slightly positive or overweight within the sector. But then I think it's important to, go for companies where you feel that expansion will go on stream, like Gujarat NRE is one company which comes to mind. Even Sesa Goa, you will see that acquisition which they made, gains coming in from there. So I think one needs to be a bit picky as to which companies one does go for. At the same time, I think some of the existing metal companies which have got large mining leases, like say Steel Authority, also could be quite interesting.
Dipan, any thoughts on the shipping space? It seems to be coming alive again because of the Baltic Dry.
Yeah, that's right. I think if commodity prices are moving up, then shipping freight rates cannot be too far behind. And overall, I think volumes in the global trade have improved, and which is why we are seeing the uptick in the shipping companies. But then, Mitali, these are highly cyclical businesses, and even within large cycles, they have smaller cycles coming into play. And end of the day, the industry hasn't been one of the favorites in the market, nor has it created a significant amount of wealth. And if you look on a structural basis, there's significant overcapacity still remaining within the industry as a whole. So a trader could look at buying it looking at the charts or the technicals. But an investor who's already holding the stock, maybe these are opportunities to try and exit or remain underweight. And there are better sectors with less volatility, which could make better find a place in the portfolio more than I think prefer over the shipping company shares.
Right from that debate you were making about NMDC, you think the issue will get done okay, or it really hinges on how they price it?
No, I think it will get done pretty well, and there are far more intelligent brains trying to work on this entire strategy and how to price it and get the best value for money for the government. And I think a few lessons have been learned from NTPC, REC. At the same time, I think NMDC is quite unique in a sense that it's in a space where there is very little peer group. Apart from Sesa Goa, there is no other stock worth buying. At the same time, the fact that it is a public sector enterprise within India, it makes more sense. It's easier for them to operate in terms of expanding capacity and gaining more mining licenses, and even trying to get the regulatory clearances. The PSU status does help. So it's quite a fantastic company. I think a bit of we are invested in NMDC and we have recommended, so we need to keep that in mind. But I think that the issue will go quite well, And if the pricing is right, then you could see that the price at which it is trading at just now, it could scale even higher just on the pop, maybe on account of some frenzy, not necessarily on the fundamental levels. But end of the day, it's a fabulous company, huge amount of cash flow coming in, and it could be one of the companies which could, going forward, come out with very huge dividend payouts as well. So a lot of things going positive for the company, and maybe retail investors could, come back big time into the FPO market, at least for this particular issue.